Hello, very good morning to all and happy Friday. I'm Kelvin here again. Welcome to today's Daily Dose of Market Insights. Very good morning. Today will be Friday, the 23rd of May, 2025. So as usual, before we start our gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the short-term technical outlook, intraday technical outlook, on those broad-based cross-asset classes, ranging from the major dollar pair, the major stock indices, and the two key commodities market, Gold XAU/USD and the West Texas crude oil that we cover on a daily basis. Let's have a quick recap what has taken shape yesterday in terms of news flow, economic data release, and as well as the movement of this intraday movement of these broad-based cross-asset classes. So let's start with the economic data flow yesterday first. So yesterday is PMI day. So we see a slew of PMI releases for flash PMI releases for the month of May. All right, so let me share with you the screen. So let's go to the economic calendar. All right, so what you could see over here is that I would say that it's still a rather mixed picture, neither showing a global economy growth expansion or the risk of a recession. Why? If you look at starting from the developed nations over here, so in starting in Asia yesterday, we have Japan. So Japan releases the global PMI data. S&P Global, compiled by S&P Global. So in Japan, the manufacturing flash PMI actually came in within expectation, 49, and however, the services dipped to 50.8 from 52.4. And as we go into the European session over here, the Germany manufacturing PMI flash for the month of May actually almost came in within expectation, 48.8. Market is expecting 48.9, still not too bad, and slightly above the previous month of April of 48.4. But however, the services PMI disappoint for Germany, where it actually dipped down further to 47.2 from what market expecting of 49.5. All right, so Germany itself is not really a services oriented economy, it's more manufacturing. So net overall, the net result is still relatively okay, I would say, given that manufacturing is still holding up in Germany, even though it's still below the 50 level mark. So if you look at the trend, the manufacturing PMI trend in Germany, even though it's still below 50, and this at below 50 is contraction, but the rate of contraction starts to slow down if you look at the broader picture, the trend. So let me share with you the charts over here. All right, so this is the Germany measure PMI. So you realize that it's slowly inching upwards since the low of in September, that is around 40 point something plus. So you look at the 3-year trend, you're actually showing signs of recovery. Manufacturing activities have started to recover in Germany. So as I mentioned over here is that the Germany economy is more manufacturing oriented rather than services. So with this rather encouraging headline number from the manufacturing flash PMI for May for Germany that is coming in slightly above the previous month of 48.4 and within market expectation by just a miss of 1 basis point. The Germany stock market yesterday was rather firm. Okay, if you look at the major the major European stock indices, Germany, yes, it managed to decline by negative 0.5%, but the interesting thing over here is that there was actually some form of support that is being formed after that initial dip down over here, the dip down at the opening. So later I'll share with you on the intraday technical outlook chart on the Germany 30 CFD index, which is representing the German DAX. All right, so then after that we have the US one that was released at 9:45 p.m. Singapore time. So for US one is rather stunningly above expectation. For the manufacturing PMI for US, compiled by S&P Global, for the flash reading for May, it actually rose above expectation. So in the expansionary mode, so 52.3 it came in. Market is expecting 50.1, so it's way above expectation by 2.3 points. All right, and also above 50.2 in the previous month of April. And even more importantly, the services PMI for US, we know that 3/4 of US economic growth in the past 20 or 30 years is being driven by services activity. So for the services PMI, definitely has much more weight over the manufacturing PMI. It also rose above expectation as well, came in at 52.3, same magnitude as the manufacturing, but above what market is expecting at 50.8, and also above what has printed in the previous month of April at 50.8. So being boss, this at it actually came out in the 15 minutes after the opening of the US cash stock market. So we start to see the major US stock indices rallied throughout the entire US session, only until the last 30 minutes, before the close of the US session. Its initial gain were all wiped out yesterday. So the S&P 500 ended almost unchanged, negative 0.04%. The Nasdaq 0.15%. So you see the Nasdaq 100 also its last 30 minutes of the US session yesterday, its initial gains were almost wiped out. Ended with a slight marginal gains of positive 0.15%, 0.15. The Dow Jones Industrial Average almost unchanged, and the Russell 2000 ended with a minute loss of negative 0.05%. So what we could see over here is that yesterday's in the major US stock indices, there was actually a pop-up, but this pop-up is being driven by that better than expected PMI data reading compiled by the S&P Global Company for the US economy, came in that better than expected. But however, before the end of the US session yesterday, in the last 30 minutes, all these initial gains were actually almost wiped out. So this doesn't represent a very strong sentiment in terms of from a technical analysis perspective, that yesterday's initial rally may have a strong foundation to actually lead the US stock market to form higher high in a multi-day perspective. So yesterday's sell-off in the major US stock indices, especially that we cover on a daily basis, the Nasdaq 100 and the Dow Jones Industrial Average, which is the Wall Street 30, the negative reacted right below our respective short-term pivotal resistance that we highlighted yesterday, which the Nasdaq 100 is at that 21,400 level, all right, over here. So yesterday, Nasdaq 100 intraday high at 21,250, all right. Later I'll cover on the short-term technical outlook chart for you guys to have a better understanding on that. So why the reason the stock market sold off yesterday, the major US stock market sold off yesterday, was also due to broad-based dollar weakness as well. So right now what we could see over here is that in the FX market, the dollar continues to remain weak. All right. So yesterday there was actually a negative reaction of that 20-day moving average, where the price action of the US dollar index has a daily close on this Tuesday. And ever since this Tuesday, price action can't break above that 20-day moving average on the US dollar index. So representing some form of broad-based dollar weakness in a short to medium term perspective over here. So that also potentially add on a negative feedback loop on the major US stock indices in the last 30 minutes of yesterday's US session as well. All right, and the reason why the dollar index is so weak at this juncture is because of the longer term US Treasury bond yield that is still remains elevated on the upside. So this is the 10-year US Treasury bond yield. is still trading above the 20, the 50, and the 200-day moving average. And the most important is the longer tenure one, which is the 30-year. So the 30-year bond yield is now above the psychological level of 5% after that major bullish breakout at the 4.96%. So if you go to the monthly time frame over here, okay, very clearly previously there's this high on October 2023. Then we're talking about close to about 1.5 year of consolidation. And in this, in fact, it's this week, not it's much earlier. So if I go to this week over here, this is the 30-year US Treasury yield. So what I could see is that this week we have that major bullish breakout, all right, over here. So if it continues to sustain in this kind of bullish candlestick by not ending this Friday, this today, by the end of the US session today, it doesn't form any spinning top or doji-like candlestick pattern. So that actually represents a major bullish breakout on the US 30-year Treasury yield. So what it actually implies over here is that number one, US interest rates, longer term interest rate is likely to be much more going on the upside rather than the downside, given the fact that the US Federal Reserve is still having this wait and see guidance. That means they are still unwilling to actually add in additional liquidity to the US economy. And one of the higher long-term interest rates potentially will also lead to so-called a bit of a risk aversion towards the US assets over here. That means we're talking about US exceptionalism starts to fail off, coming back into the picture, and potentially higher longer term interest rates will also lead to higher longer term cost of funding, and that could actually impact US corporation earnings growth potential in terms of the net profit margin compression, as you know that how if we have a higher cost of funding, and if the global economy starts to slow down, that means a global sales revenue can't able to offset this higher cost of funding, you see a net profit margin compression instead of expansion. So that could actually see a revision in US earnings growth in the next next in Q3 and as well as in Q4. Okay, so that also explains why the negative feedback loop all boils down to this. Number one is because of this rather aggressive Trump tax bill. Okay, so we know that Trump tax bill based on independent findings, stating that the bill includes that will actually see the U.S. debt ceiling increase by 4 trillion over here. Okay, a 4 trillion increase in U.S. debt ceiling that would, okay, and because of this increase in US debt ceiling of 4 trillion, the US budget deficit will widen, and potentially that's why we're at that will actually see the US 10-year longer term treasury yield inching upwards to the upside, compensating, giving as a form of compensation for investors who wants to hold US treasury debts or US Treasury fixed income, I would say. And this bill has narrowly passed the House, so now it's up for voting in the Senate over here. All right, so where do I see? Yeah, so the bill now hits the Senate, where groups of Republicans are pressing for some changes, given the fact of some of the Republicans feel that this bill is too much extensive, that could actually lead to physical deterioration in the current physical position in the U.S. Government over here. So because of this increase of the 4 trillion increase in US debt, so there is actually a forecast saying that that debt ceiling crisis may come again and forces a default in the US as soon as August or September. All right, so this because of this passage of this rather aggressive physical tax cut bill, that actually potentially could see a widening of the US budget deficit. 4 trillion increase the US debt ceiling, which increased the risk of that so-called technical default of the US government. So but we know that US government can't default, but because of this fear, it could create a negative feedback loop to risk assets in US. And that also explained to us why the dollar is actually on a weaker ground at the start of this week as well. Right. So another news flow and share with you all is so more pertaining to the FX market as well. So in the FX market, we continue to see the dollar yen is being the weakest among the dollar against the major currency. That means yen strength is coming back into the picture. So based on a 5-day rolling performance basis, the dollar yen now is actually down by negative 0.4%, down by negative 0.4%, still trading below the 20-day moving average. So the dollar yen right now, based on the 5-day rolling performance basis, is the weakest among the major dollar pair. So dollar yen is down by negative 16%, okay, down by negative 16%, and is trading much more worse than the dollar index, which is down by negative 0.10%. So the fact that why the dollar is so weak against the yen in today's Asia session is because of inflation data in Japan is actually firming up its upward trend. So that actually supports a Bank of Japan slow and gentle normalization monetary policy to gradually increase Japanese short-term interest rate. So if you look at the where's the calendar again? Yeah, this is the calendar. Okay, so in early today's Asia session at 7:30 a.m., the core inflation rate that is excluding fresh food but includes energy rose to close about a year high, 3.5%, from what market expecting of 3.4%. So and also above the March figure print of 3.2% over here. Yeah, so this is the core consumer price index, which exclude fresh food but includes energy, rose to 3.5% year on year in April, and that is the highest reading in almost 2 years over here. So very clearly is in a major uptrending phase for the core inflation rate in Japan. And if we strip out energy prices, that means excluding fresh food and energy, so that is the core rate over here. Okay, in Japan, it's quite weird. They have these two components. One is only strip out fresh food, include energy, core inflation. If you strip out fresh food and energy, they call it core inflation rate. So the core inflation rate also rose 3% from 2.9% in the previous month of March. So if you look at the core, where is it? Yeah, this is the one. Okay, Japanese core CPI, it rose to 3% in April. So that is also the highest reading, okay, since January 2024. So that's about 1 year and 4 months higher. So also very clearly is in a V-shaped movement upwards as well. All right, a V-shaped movement upwards, for the core inflation trend in Japan. So all this latest inflation print in Japan, both on the core basis and the core basis and the core basis, is actually supporting Bank of Japan gradual normalization monetary policy to slowly increase its short-term interest rate. So that actually supports the Japanese yen strength revival, which in turn sees a significant dollar weakness against the Japanese yen. So later I'll touch on the short-term intraday technical outlook on the dollar yen, where actually it reacted right exactly our short-term pivotal resistance that we highlighted yesterday, where we have maintaining a short-term intraday bearish stance since late last week. All right, so that and also another news flow is more pertaining to oil price. So oil price yesterday, we flipped back to a intraday trend bearish bias because there is a negative daily candlestick, bearish daily candlestick right exactly at the 50-day moving average, I think as a resistance for West Texas crude oil. And yesterday there is a negative news flow that supports a further downside movement. Is OPEC Plus discusses potentially another supersized output hike for July. So we know that OPEC Plus is very in tune of increasing production, not slowing down production, but increasing production. So their members now are discussing a third consecutive oil production surge or hike in July, with additional output of 411,000, means 411,000 barrels per day, another additional increase. So we know that right now there is actually a potential global slowdown prospect is increasing. Why? Because of that tariffs uncertainty that is causing a lot of companies to actually cut back on capital investment plan. And you read the news, a lot of MNC are slowing down on hiring. So with this a slowdown in external demand and a further increase by OPEC plus, perhaps it's not due to economic reason, it's more due to political reason. Do not forget, this news came on top after Trump visited the Middle East region late last week to early this week. All right. So Trump's initial campaign promises is to actually make oil price in US as low as possible. All right. And because of this, potentially is OPEC plus could be much more political driven right now rather than economically driven. All right, so they actually but we still got to respect their decision, and their movement will dictate their this supply increase by OPEC could potentially see to cap further strength in oil prices globally. All right, so later I'll touch on the intraday technical outlook on West Texas crude oil, on what are the key levels to look out for today. All right, so with that ends the first segment of today's daily dose. So let us now move on to the next segment, which is the intraday technical outlook segment on those major cross asset classes, starting with the FX market first. So as usual, let me expand my screen. All right, so let us start with the FX market over here, starting with the euro dollar. All right, so the euro dollar, what we could see is that yesterday there was a pullback, and that minor pullback managed to store exactly at our short-term pivotal support level, a tightened one, a slightly upward adjusted one at 112.80, which is also confluence with the 20-day moving average, acting as a similar support level as well, before shaping that minor V-shaped recovery in today's Asia session. And also the RSI right now managed to stage a bullish momentum breakout as well. Okay, over here. Okay, this bullish momentum breakout. Okay, what we could see here. So net overall, what we could have over here is that number one, positive bullish momentum breakout as seen on the hourly RSI, minor V-shaped recovery right exactly at the 20-day moving average, which is the 1.1280 short-term pivotal support level that we have for yesterday on the euro dollar. So it makes sense for us to maintain our intraday trend bullish bias on the euro dollar, with first resistance we are down at 113.70. Only a break above 113.70 may expose the next intermediate resistance at 114.25 next, which is the minor swing high area of 29th of April and 30th of April. Only a hourly close and a bearish breakdown below 1.1280 short-term pivotal support that would negate today's intraday trend bullish bias to kickstart a minor corrective pullback sequence, exposing the next support level at 1.1215. A breakdown below 1.1215 may see the next near-term support coming in at 111.35, which will correspond to the rising 50-day moving average. Okay, so that's for the euro dollar. Up next will be the sterling dollar. So the sterling dollar right now seems to be poised for a minor bullish breakout. Why do I say that? So if you look at the last price action on 21st of May, all the way up to yesterday's today's Asia session low over here, it seems to be a congestion in a bullish pennant formation. And this bullish pennant formation, if you look at the RSI, taking into account of the same movement, parallel price movement on the sterling pound, the sterling dollar, the RSI has managed to state a pre-bullish signal, right, by breaking out over here. Okay, so there's a bullish breakout that is being seen on the hourly RSI, and the bullish breakout took shape right exactly slightly above the 50 level mark and has yet to hit the overbought region yet as we are speaking right now. So this indicate a potential bullish breakout on the sterling dollar after it formed a minor bullish pennant formation since Wednesday minor high level at 1.3440. So a very a push up above 13440 during the European session when the European session starts. So I could actually tighten the short term pivotal support level to 134 figure level over here. But meantime, I'm still using the 133.35, which is the short-term pivotal support that we have yesterday, and so confirms with the 20-day moving average, just in case of any weird whipsaw on the downside. So I don't want to be so aggressive and tighten my short-term pivotal support level to the 133.96 level at this point in time. So unless we have an hourly close above 134.40 at the start of the European session, then I could tighten it to 133.96. All right. So for now, potential bullish breakout that could be seen on the sterling dollar. So still maintaining our intraday trend bullish bias. Above 134.40 sees the next intermediate resistance coming in at 135.05 and even 135.15, 135.50 for today, which is the 1.382 Fibo extension taken from the low of 12th of May. Only hourly close and a sudden bearish breakdown below 133.35 that would negate today's intraday trend bullish bias to see the start of another round of choppy corrective pullback sequence. Retesting 132.50, a breakdown below 132.50 may expose the psychological support, next psychological minor support level at 132 figure. So that's for the sterling dollar, maintaining our intraday trend bullish bias for a potential minor bullish breakout scenario that may take place at the start of the European session thereafter. Next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar continues to trade within this tight sideways range. Yesterday, it attempts to hit the first resistance at 64.60, can't break above it, which is also the 200-day moving average before sloping down, shaping downwards in during the US session. But at the US session, towards the end, it managed to stage a U-turn right exactly at our 64 short-term pivotal support level. So it seems to us that the Aussie dollar continues to trade within this tight sideways range. So it's a sideways range within a sideways range. Yeah? So this sideways range, the bigger one started from 16th of April, all right, and the shorter one started on 15th of May. Right, so it's a sideways range within a sideways range. So no change, 64 short-term pivotal support level, still maintaining that intraday trend bullish bias, given the fact that right now we see a generalized dollar weakness in other major currency. So it's not prudent for us to have a outright bearish bias on the Aussie dollar. So first resistance it got to surpass for sure will be 64.60 before opening up scope towards 65.15 slash 60. So actually it's a range over here. Okay, 65 figure slash 65.15. Okay, let me put it in writing for you guys. Come on. Okay, seems not to be coming up. All right, give me a minute. Yes, finally it's up. Okay, 65 figure. Okay, 65 figure, 65.15. All right. So that's for the Aussie dollar. So I repeat, it's now trading in a sideways range, within a sideways range. 64 figure will still be our short-term pivotal support. Maintain that intraday trend bullish bias within this sideways range configuration. Only a breakout above the 200-day moving average, which is the minor sideways range resistance as well, which is 64.60, may expose 65 figure and 65.50 next. However, a price action breakdown below 64 figure level and an hourly close below it, that would negate today's intraday trend bullish bias to see it floating down towards the lower limit of the higher time frame range resistance higher time frame range configuration support that is in place since 16th of April, pardon me, and so confluence with the 50-day moving average at 63.60 slash 63.30. So that's for the Aussie dollar. Lastly will be the dollar yen. So dollar yen yesterday plunged down as expected, hit our first support level 42.90 slash 35, before staging that rebound. That rebound can't surpass our tightened short-term pivotal resistance that we have yesterday at 144.60 before shaping that bearish reaction in the middle part of yesterday's US session, and in Asia session right now it's going to extend its losses to negative 0.36%. So for sure the 144.60 will still remains our short-term pivotal resistance level after yesterday's negative reaction right below it, still maintaining that intraday trend bearish bias on the dollar yen. First support level to watch 142.90/35. So a breakdown below 142.35 may expose the next near-term support level at 141.05, which is the 2 times Fibo extension on the downside taken from the high of 13th of May, and as well as this minor congestion area of 22nd of April to 22nd of April to 21st/22nd of April, right? However, if we start to see a U-turn and a bullish breakout with an hourly close above 144.60, that would invalidate today's intraday trend bearish bias on the dollar yen to see a squeeze up to revisit 146.20, which is close to the 50-day moving average, I think as a similar resistance area as well. So that's for the dollar yen, still maintaining our intraday trend bearish bias with 144.60 as my short-term pivotal resistance level. Next up will be the major stock indices, starting with the Hong Kong 33, which representing the Hang Seng Index. So no change. The Hong Kong 33 did a nice bullish reversal right above the 23,370 short-term pivotal support level after this minor pullback has taken shape. So also it managed to stage that rebound right exactly at the lower limit of this minor ascending channel that is in place since 16th of April. So using 23,370 as my short-term pivotal support level, and we also start to see a positive observation in the hourly RSI, and it starts to shape a bullish momentum breakout over here. All right, so with this latest positive observation in the hourly RSI representing a bullish momentum in the short term still remains intact for the Hong Kong 33, still maintaining our intraday trend bullish bias on the Hong Kong 33 using 23,370 as my short-term pivotal support. First resistance level to watch 23,970/24,040. Above it sees 24,350 coming in next. Only a price action breakdown and an hourly close below 23,370 will invalidate today's intraday trend bullish bias to kickstart a minor corrective pullback sequence, exposing the next support level at 22,970 slash 22,680, which confluence with the 20-day and the 50-day moving average. And right now we start to also see a bullish crossover above the 20-day moving average, moving up above the 50-day moving average, also further supports this ongoing bullish trend bias in the Hong Kong 33. Next will be the Japan 225. So the Japan 225 yesterday almost hit our first support level at 36,630 before shaping a rebound, and it's now playing around the 20-day moving average, but starts to form a hourly bearish shooting star candlestick pattern at the start of the 9 a.m. mark today in Asia session, and also right below our short-term pivotal support level, pivotal resistance level as well, which is 37,435. So still no change, still maintain that intraday trend bearish bias given the appearance of that hourly bearish shooting star candlestick right below the 37,435 short-term pivotal resistance that we have yesterday. Next support level to watch will be 36,630. Only a breakdown below 36,630 may expose the next near-term support level coming in at 36,260, which confluence with the 50-day moving average. Only an hourly close and a bullish breakout above 37,435 that would negate today's intraday trend bearish bias to see a squeeze up to revisit the 200-day moving average, now confluencing with the next intermediate resistance level at 37,925. All right, now we proceed towards the European stock market, which is the Germany 30, representing the German DAX. So the German 30, the German DAX managed to come down, hit the first support level at 23,900 before shaping a minor bounce over here. So still no change as it's managed to hold above our short-term pivotal support level that we have. since yesterday at 23,675. So still using 23,675 as my short-term pivotal support level, maintaining that intraday trend bullish bias for a potential bullish breakout above 24,170/24,190. That is almost hit on Wednesday before it traded sideways yesterday. So above 24,190 may see the next intermediate resistance zone coming in at 24,440/24,560, which is a fresh all-time high area, which is being defined or being calculated or derived by a Fibo extension cluster zone. Only an hourly close and a bearish breakdown below 23,675 that would invalidate today's intraday trend bullish bias to kickstart another round of minor corrective pullback sequence, exposing the next support level at 23,380, which correspond to the rising 20-day moving average. Only a breakdown below 23,380 may open up scope for a deeper corrective pullback, exposing the next near-term support level at 23,070, which is the minor swing low area of 5th of May, 6th of May, and as well as 8th of May. All right, so still maintaining our intraday trend bullish bias using 23,675 as my short-term pivotal support for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30 that's representing the Dow Jones Industrial Average. So what you could see over here is that initially there was a sell-off, all right, then this sell-off stage a bounce, and this bounce can't actually go past the first resistance level that we highlighted yesterday, which is 42,190 level. So still no change, still trading below the 200-day moving average on the US Wall Street 30, which is our short-term pivotal resistance that we have yesterday. So still maintaining the short-term pivotal resistance at 42,430. With that, we still have that short-term intraday trend bearish bias on the US Wall Street 30 for it to drift down towards the lower limit of this medium-term ascending channel support that is in place since 7th of April this year. All right. So first support level to watch for today will be at 41,615. Okay, let me put it in writing. 41,615, which was yesterday's intraday low over here. Okay, a breakdown below 41,615 may expose 41,350 slash 41,135 over here. Okay, which will correspond to the 50-day moving average as well, very closely. Only an hourly close and a bullish breakout above 43,430, that means a breakout above 200-day moving average, that would invalidate today's intraday trend bearish bias to reinstate that bullish impulsive up move sequence on the US Wall Street 30 to revisit the next intermediate resistance zone in the first step at 42,870 slash 43,085. All right, so that's for the US Wall Street 30. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100 continues to trade downwards, can't break above the 21,400 short-term pivotal resistance level and drift sideways. Hit our first support level at 21,040 and managed to survive yesterday. So what I could see is that the hourly RSI continues to shape a series of lower high, right, representing no clear signs of a bullish momentum resurgence. So with that, we continues to maintain our intraday trend bearish bias for a potential minor setback scenario to unfold on the Nasdaq 100 using 21,400 as my short-term pivotal resistance level. A breakdown below 21,040 may expose the next near-term support level in first step at 20,690. A breakdown below 20,690 may see 20,390 coming in next, which is the 200-day moving average and the 20-day moving average acting as a similar support area at around the 20,390 level. However, if price action managed to shape a bullish reversal and hourly close above 21,400, then that would invalidate today's intraday trend bearish bias to reinstate the boost for another round of impulsive up move sequence, exposing the next intermediate resistance in first step at 21,750. All right. So that's for the major stock indices intraday technical outlook. So now let us now turn our attention to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, yesterday we do have a tightened short-term pivotal support level at 32,032.90. So price action managed to stage that minor pullback, and that minor pullback managed to survive exactly at the 32,930 level before trading sideways in the entire US session. So still no change, still using the 32.90 as my short-term pivotal support level for today. And we start to see the hourly RSI shaping a series of higher low, right, indicating some form of intraday bullish momentum build up. So as long as 32.90 short-term pivotal support holds for today, we'll still maintain our intraday trend bullish bias for gold. First resistance level to watch will be 33.60 for today. Only a bullish breakout above 33.60 may expose the next near-term resistance zone of 34.17, 34.35, which is the minor swing high area of 8th of May and 7th of May. However, if we start to see a price action breakdown with an hourly close below 32.90, then that would negate today's intraday trend bullish bias to kickstart a minor corrective pullback sequence, exposing the next near-term support level at 32.52. However, if 32.52 can't survive and it break down, have an hourly close below 32.52, then that minor pullback sequence may unfold into a deeper pullback, exposing the next support level at 32.04, which is pretty much crucial because that corresponds to the 50-day moving average. So I'll be watching your signs for if there's any signs for a bullish reversal candlestick taking shape on the hourly basis as 32.04, then that could kickstart another round of much more significant bullish reversal coming back into gold XAU/USD again. All right, lastly will be the West Texas crude oil. So the West Texas crude oil yesterday continues to trade negatively below that 64.06 short-term pivotal resistance that we have and hit our first support area at 6130/6035. All right, and it starts to trade sideways over here. All right, no clear signs of a bullish divergence on the hourly RSI, so indicating that there could be still further weakness on the West Texas crude oil. So no change. We first resistance level to watch will be this level here before the start of that sell-off, all right, in the European session yesterday, which is at 62.20. That will be our first resistance level. Pivotal resistance will be at 64.06. So as long as any bounce didn't surpass above 64.06, we'll still maintain our intraday trend bearish bias within this kind of symmetrical triangle range configuration, which is highlighted by this purple line that is in place since 9th of April low. Below 60.35 may expose the next support level to come in near term at 58 figure. Only an hourly close and a bullish breakout above 64.06 that would invalidate today's intraday trend bearish bias to see another round of corrective rebound sequence unfolding. In first step, exposing the next resistance level at 65.40, which is the minor swing high of 23rd of April. All right, so that sum up the intraday technical outlook on those broad-based cross asset classes. And now let us focus our attention on the economic calendar to see what are the key data to look out for today. All right, so today will be Friday. So Friday during the start of the European session, we have UK retail sales figure out at 2 p.m. Singapore time. So that could potentially influence the sterling dollar, the sterling crosses, and as well as the UK 100 CFD index. And at 4:30 p.m., we have a ECB official speaking, ECB lane, and stretching up into before the start of the US session. For those who are focusing on the dollar CAD and the CAD crosses, we have Canada retail sales that will be out at 8:30 p.m. Singapore time. And thereafter, there will be no tier 1 economic data other than new home sales, which considers a tier 2 data. So that is at 10 p.m. Singapore time. And right after the on Saturday, we have this 12 a.m. over here. So at this 12 a.m. mark, we have Fed Cook official speaking, which is at 12 a.m. Singapore time, and also at 12 a.m. Singapore time, we have ECB Schindelberg officials, ECB official Schindelberg speaking. So a rather quiet US session. And what's interesting over here on Sunday, that means early Monday Asia time, 2:40 a.m. We have Fed Chair Powell speaking. So his speech may influence may potentially impact on early Monday Asia session cross asset movement. That means starting from 7 a.m. onwards. So something to look out for at 2:40 a.m. Monday Singapore time on Monday, right? 26th of May. All right. So with that, that sum up today's daily dose of market insights. And today's Friday. I wish you all a happy Friday and a great weekend. And we shall speak again on next Monday at 11 a.m. on 26th of May. This is Kelvin here signing off. Thank you.